Want to turn your savings into a fortune? What if one stock could 10 times your money? That's exactly what Wall Street legend Tom Lee is predicting. He's calling for an explosive surge in Nvidia, a company already at the forefront of the tech revolution. Is this a once-in-a-lifetime opportunity or too good to be true? We're diving deep into Tom Lee's bold prediction, analyzing the potential risks and rewards. Get ready to uncover the factors driving Nvidia's growth and learn if this tech giant is your ticket to financial freedom. Let's get started. Alright, so who is Tom Lee and why should we care about his predictions? Well, in the world of finance, Tom Lee is a big deal. He's not just some random guy with an opinion. We're talking about a Wall Street veteran, a seasoned strategist with decades of experience analyzing markets and making bold calls. He's the head honcho at Fundstrat Global Advisors, a research firm known for its insightful analysis and market forecasts. Now, you might be thinking, okay, so he's experienced, but is he right? Well, Lee has a pretty impressive track record. He's been spot on with some major market calls in the past, anticipating trends and predicting movements that have made investors a lot of money. Remember back in 2017 when everyone was freaking out about Bitcoin? Lee was one of the first to predict its meteoric rise, and those who listened made a killing. But it's not just about being right. What sets Lee apart is his willingness to acknowledge when he's wrong, to learn from his mistakes, and to adapt his strategies accordingly. He's not afraid to say, hey, I missed the mark on that one, and then explain why. That kind of transparency and accountability is rare in the financial world, and it's one of the reasons why people trust his insights. But beyond the numbers and the predictions, Tom Lee is a firm believer in the power of technology to shape the future. He's particularly bullish on companies at the forefront of innovation, those pushing the boundaries and driving transformative change. That's why his prediction about Nvidia is so intriguing. Before we jump in deeper, hit that like button and subscribe to the channel to stay ahead of the curve with the latest market insights and investment opportunities. Tom Lee sees Nvidia not just as a player in the tech space but as a potential game changer, a company poised to revolutionize entire industries. So, when Tom Lee speaks, people listen. He's not just throwing darts at a board. He's carefully analyzing the landscape, identifying the trends and making calculated bets on the future. And right now, his bet is on Nvidia. But why? What is it about this company that has him so convinced? That's what we're going to dive into next as we explore the bull case for Nvidia, examining the factors that could propel this tech giant to unprecedented heights. Stay tuned. Alright, let's talk Nvidia. You might know them for their killer graphics cards that power those awesome gaming PCs. Gamers swear by Nvidia, and for good reason. Their technology delivers stunning visuals and smooth, immersive gameplay. But here's the thing. Nvidia's reach extends far beyond the world of gaming. They're at the forefront of a technological revolution, and that revolution is artificial intelligence. We're talking self-driving cars, facial recognition, medical diagnoses, you name it. AI is transforming industries left and right, and Nvidia is perfectly positioned to capitalize on this massive trend. Their chips are the brains behind many of these AI applications, crunching massive amounts of data and enabling machines to learn and make decisions like never before. Think about it. As AI becomes more sophisticated and integrated into our lives, the demand for Nvidia's chips is only going to skyrocket. And we're not talking about some niche market here. We're talking about a fundamental shift in how we live, work, and interact with the world around us. Nvidia is already a dominant player in the GPU market, but their AI chips are opening up entirely new avenues for growth. Companies like Tesla, Google, and Facebook are pouring billions into AI research and development, and they're all relying on Nvidia's hardware to power their innovations. This is huge for Nvidia. We're talking about a massive addressable market, and they're in a prime position to grab a significant chunk of it. Now let's get to the heart of the matter, Tom Lee's 10 times prediction. What's fueling this bold call? Well, Lee believes that Nvidia's current valuation doesn't fully reflect the company's long-term growth potential. He sees Nvidia not just as a chip maker, but as a platform company, a company whose technology will underpin the future of entire industries. Remember when Amazon was just an online bookstore? Look at them now. Lee sees a similar trajectory for Nvidia. As their AI technology matures and their market share expands, their revenue streams will diversify, and their profitability will soar. This isn't just about selling more chips, it's about building an ecosystem around their technology, a network of partners and developers that will drive further innovation and growth. And it's not just AI. Nvidia's making waves in other high-growth sectors like autonomous driving. Their drive platform is a comprehensive solution for self-driving cars, providing the computing power, software, and sensors needed to navigate complex environments. Major automakers are already integrating Nvidia's technology into their vehicles, betting on their expertise to bring self-driving cars to the masses. Again, we're talking about a massive market with the potential to reshape transportation as we know it. Nvidia's not just dipping their toes in, they're diving headfirst, forging partnerships and investing heavily in research and development. This commitment to innovation and their willingness to push boundaries are key reasons why Tom Lee is so bullish on their future. So, there you have it. The bull case for Nvidia is compelling. They're a dominant player in a rapidly growing market. They're at the forefront of AI and autonomous driving, and they have a visionary leader at the helm. Tom Lee's 10 times prediction might seem audacious, but when you look at the underlying factors, it's not as far-fetched as it might initially appear. But remember, no investment is without risk. We've only scratched the surface here. In the next act, we'll dive into the bear case for Nvidia, examining the potential pitfalls and challenges that could hinder their growth. We'll explore the competitive landscape, analyze potential roadblocks, and uncover the risks that investors need to be aware of. If you're enjoying this and want a deeper dive into spotting undervalued stocks, I've put together a free guide for you. 7 proven steps to spot undervalued stocks like a pro. Now, before you rush out and pour your life savings into Nvidia stock, let's pump the brakes for a second and talk about the bear case. Because let's be real, no investment is a sure thing, and Nvidia, despite its impressive trajectory, faces some serious challenges. First and foremost, the tech world is a cutthroat arena, and Nvidia isn't the only shark circling the waters. They've got some fierce competition, companies with deep pockets and a hunger to dominate the same markets. We're talking about giants like Intel, a company that's been a powerhouse in the chip industry for decades, and AMD, a company that's been giving Nvidia a run for its money in the gaming GPU market. And let's not forget about Google, a company with its fingers in every tech pie imaginable, including AI, where they're developing their own custom chips. These companies aren't just going to sit back and watch Nvidia run away with the prize. They're innovating, investing heavily in R&D, and gunning for a piece of the action. Another challenge for Nvidia is its dependence on a handful of major customers. We talked about how companies like Tesla, Google, and Facebook are relying on Nvidia's chips for their AI ambitions. That's great for Nvidia, right? Well, yes and no. While it's fantastic to have these tech titans as customers, it also creates a vulnerability. If one of these major players decides to switch suppliers, to develop their own in-house chips, or if their own fortunes take a downturn, it could have a significant impact on Nvidia's bottom line. Think about it. If Tesla, for example, decided to go all in on their own custom AI chips for their self-driving cars, it would be a major blow to Nvidia. They'd lose a significant chunk of revenue and their stock price would likely take a hit. This dependence on a few key players introduces an element of uncertainty into Nvidia's future prospects. And then there are the ethical concerns surrounding AI. This is a big one, folks. As AI becomes more powerful, more pervasive in our lives, it raises a whole host of ethical dilemmas. We're talking about things like job displacement, algorithmic bias, privacy violations, and the potential for AI to be used for malicious purposes. These aren't just hypothetical concerns, they're real issues that we're already grappling with today. And as a leading provider of AI technology, Nvidia is right in the thick of it. Governments around the world are starting to regulate AI, and there's a growing public debate about the responsible development and deployment of this powerful technology. It's possible that future regulations could limit the applications of AI, potentially impacting the demand for Nvidia's chips. And let's not forget about the hype factor. What if the hype dies down? The tech world is notorious for its hype cycles, where companies and technologies get bid up to unsustainable valuations based on future promises and market euphoria. Remember the dot-com bubble? Investors poured money into internet companies with no profits and questionable business models, only to see the bubble burst, wiping out trillions of dollars in value. Now, I'm not saying that Nvidia is in a bubble, but it's something to be aware of. Their stock price has been on a tear, driven in part by the excitement surrounding AI. But what if the hype dies down? What if the growth of AI doesn't live up to the lofty expectations? It's possible that Nvidia's stock price is currently inflated by overly optimistic projections, and if those projections don't materialize, we could see a correction. So, there you have it, the bear case for Nvidia. They face fierce competition, they're reliant on a handful of major customers, ethical concerns surrounding AI could impact their business, and their stock price might be overheated. Does this mean you should avoid Nvidia stock altogether? Not necessarily. Remember, every investment carries risks, and Nvidia, despite these challenges, remains a company with enormous potential. The key is to go in with your eyes wide open, to be aware of the potential downsides as well as the upsides. Don't let the hype cloud your judgment. Do your own research, analyze the competitive landscape, consider the ethical implications, and determine if the potential rewards outweigh the risks. Investing is a marathon, not a sprint. So, we've explored both sides of the coin, the compelling bull case and the cautionary bear case for Nvidia. On the one hand, you've got a company firing on all cylinders, riding the wave of AI and autonomous driving with a market-leading position and a visionary CEO. On the other hand, You've got fierce competition, dependence on a few major customers, ethical concerns surrounding AI, and the potential for a market correction. It's enough to make your head spin, right? But here's the thing. Investing isn't about predicting the future with absolute certainty. If it were, we'd all be lounging on yachts, sipping Mai Tais, right? The reality is there's always an element of uncertainty, an unknown variable that can throw a wrench in even the most well-crafted predictions. The key is to acknowledge this uncertainty, to embrace it as part of the game, and to make informed decisions based on the best available information. So, where does that leave us with Tom Lee's 10 times prediction for Nvidia? Is he onto something, or is he getting caught up in the hype? Well, as we discussed earlier, Lee isn't some random guy with a hot take. He's a seasoned strategist with a track record of making bold predictions, some of which have turned out to be incredibly accurate. He's not always right, of course, but he's got a knack for spotting trends and identifying companies with the potential to disrupt industries and generate massive returns for investors. And let's not forget, Lee's prediction isn't based on thin air. He's done his homework, analyzing Nvidia's financials, market position, and growth prospects. He sees a company with a strong competitive moat, a massive addressable market, and a management team that's committed to innovation and execution. He believes that Nvidia is more than just a chip maker. They're a platform company, an enabler of the AI revolution, and that their current valuation doesn't fully reflect their long-term earnings potential. Now, whether Nvidia actually achieves a 10 times return in the coming years is anyone's guess. The market is a fickle beast, and unforeseen circumstances can always derail even the most promising companies. But here's the thing. Even if Nvidia falls short of that lofty target, their trajectory remains undeniably compelling. They're operating in a space that's only going to become more important in the years to come, and they're constantly pushing the boundaries of what's possible with their technology. Think about it. AI is already transforming industries like healthcare, finance, and transportation, and we're still in the early innings of this revolution. As AI becomes more sophisticated, more integrated into our lives, the demand for the kind of high-powered computing that Nvidia provides is only going to increase. And let's not forget about their other growth drivers like autonomous driving and data centers, both of which are poised for explosive growth in the coming years. So there you have it. We've journeyed through the exhilarating peaks of the bull case, navigated the treacherous valleys of the bear case, and emerged with a balanced perspective on Tom Lee's audacious 10 times prediction for Nvidia. The question remains, should you buy into the hype and ride the Nvidia wave? Well, as always, the answer is not a simple yes or no. It's about understanding your own investment goals, risk tolerance, and doing your due diligence. Nvidia, without a doubt, is a company at the forefront of a technological revolution, a company that could very well redefine the future. But it's not a guaranteed home run. The tech landscape is littered with companies that once held immense promise, but ultimately stumbled. The key is to approach this investment with a healthy dose of skepticism, to weigh the potential rewards against the inherent risks. Don't let the hype cloud your judgment, and never invest more than you can afford to lose. If you enjoyed this and want a deeper dive into spotting undervalued stocks, I've put together a free guide for you. 7 proven steps to spot undervalued stocks like a pro. It's packed with insights and strategies to help you make smarter investment decisions. Click the link in the description below to grab your free copy. And while you're at it, hit that like button and subscribe to the channel for more insightful analysis and market-moving predictions. Until next time, stay informed, stay invested, and stay ahead of the curve.